Look at me right now, because I need you to hear me loud and clear. You have worked 40, maybe 45 years for every single dollar sitting in your 401k or your traditional IRA. You sacrificed, you saved, you skipped vacations, and you did everything you were supposed to do. And now, you are either in retirement or standing right on the threshold of it. You do not have another 30 years to make back money if the stock market decides to take a giant nosedive. You don't. So when you turn on the television or open your mail and you see terrifying headlines about runaway inflation, the shrinking purchasing power of the dollar, national debt spiraling out of control, and global conflict, what happens? Fear sets in. Real, visceral fear. You look at your nest egg and you ask yourself, is my money actually safe? That single question is why millions of retirees and pre-retirees are suddenly asking about Gold IRAs. They want to know why so many investors are moving a portion of their hard-earned retirement savings out of paper assets and into physical, tangible gold. Today, I am going to break down exactly why investors choose Gold IRAs, what problem they are trying to solve, the massive fears driving this movement, and, most importantly, the cold, hard truths and actionable rules you must follow so you don't get ripped off or ruin your tax status. First, let's understand the core problem that is keeping retirees awake at 3 o'clock in the morning. For decades, traditional retirement advice told you to hold a classic 60-40 portfolio, 60% stocks for growth, 40% bonds for safety. But in recent years, we have seen inflation erode the buying power of cash, while rising interest rates pummeled traditional bond funds. When both stocks and bonds drop at the same time, paper currency loses its purchasing power, and your standard safety nets fail. Where do you turn? You look for an asset that has stood the test of time for 5,000 years. Gold. Investors choose a Gold IRA, which is simply a specialized, self-directed individual retirement account, because it allows you to hold actual, physical bullion bars and coins inside a tax-advantaged account structure. When you hold a normal IRA at a traditional brokerage, you own paper, stock certificates, mutual fund shares, ETF units, and digital numbers on a computer screen. If that financial institution faces a crisis or the stock market plummets, your paper wealth plummets with it. A Gold IRA appeals to the deep human desire for true ownership and security. It represents a hard, finite asset that cannot be printed out of thin air by a central bank and cannot go to zero. The biggest driver here is diversification and inflation protection. When inflation rises, the purchasing power of the paper dollar drops. Historically, gold has acted as a proven store of value over long periods. When panic hits Wall Street, money tends to flee paper assets and rush into tangible commodities. So by allocating a portion of a retirement portfolio to physical precious metals, retirees are trying to build an insurance policy around their nest egg. They aren't trying to get rich quick, they are trying to stay rich. They are trying to preserve the wealth they spent a lifetime building. If you decide that a Gold IRA is right for your overall financial plan, the golden rule of thumb for allocation is generally between 5 to 10% of your overall portfolio, never your entire retirement fund. That 5 to 10% acts as your shock absorber. If the rest of your portfolio takes a hit, your gold allocation helps cushion the blow without choking off your monthly income needs. Now, let's talk about how a Gold IRA actually works, because the Internal Revenue Service has very strict rules, and if you violate them, the tax penalties will make your jaw drop. You cannot simply call up a gold dealer, buy a bunch of gold coins, and shove them under your mattress or put them in a safe in your closet while claiming it's in an IRA. If you store IRA gold at home, the IRS considers that an immediate, full taxable distribution of your entire account. If you're under 59.5, you'll pay a 10% early withdrawal penalty on top of ordinary income taxes, and if you're over 59.5, you will get hit with a massive tax bill in a single year. To do this correctly and legally, 3 distinct entities must be involved. First, you open a self-directed IRA with an IRS-approved custodian, an administrative company that legally handles the paperwork and maintains the tax-sheltered status of the account. Second, you purchase eligible physical precious metals through a reputable dealer. The IRS requires gold bullion or coins to meet strict purity standards, specifically 99.5% pure gold, with a special statutory exception for American Gold Eagle coins. Third, the physical gold must be shipped directly from the dealer to a high-security, IRS-approved depository facility where it is locked in a vault, insured, and independently audited. You retain full ownership of the metal inside your IRA, but it resides in a secure facility until you take a formal distribution down the road. So what is your actionable takeaway today? First, take a deep breath and assess your true financial needs. Are you looking for income, or are you looking for preservation? Second, if you feel anxious about inflation or market volatility, examine your current overall portfolio balance before buying anything. Third, if you decide to explore a gold IRA, work only with well-established, transparent IRS-approved custodians and depositories. Demand a complete, written fee schedule upfront covering setup fees, annual management fees, storage costs, and dealer buyback spreads. Never buy collectible or numismatic coins pushed by pushy salespeople claiming they have secret value. Stick strictly to standard, liquid IRA-approved bullion bars or official government bullion coins like American Eagles or Canadian Maple Leafs. You work too hard for your freedom to let fear dictate your choices or let aggressive salespeople erode your savings. Stand in your truth, protect your hard-earned money, keep your portfolio balanced, and make every financial decision from a place of power, clarity, and peace of mind.